But ultimately, what I'm trying to express is in the foundation of learning how to learn, clear your misunderstandings so you continue to move forward as a bright student. Does that make sense? So if you got questions, we need to clear them so that you can move forward as a bright student, because I don't want to lose you as an audience. Okay, very, very important. And that's the challenge when you've got someone who's presenting material, because if they continue and you're accumulating misunderstandings, you will manifest those physical symptoms, and then ultimately you'll commit a sudden departure from the material. And I don't want to do that. So I'm going to present this in this as simple a fashion that I can, and craft this in a way that we can continue to move you guys forward as bright students. Okay. Clear on that? You guys
And you
got
know
it?
what's funny? Because the owner actually sent his CFO to
Yeah, it's
question
a very
this.
interesting concept.
Because
Thank you
the
for sharing
CFO was
that.
actually
Yeah,
thinking,
yeah, very, very
Polish
important.
responsible
So
for doing this? Because
that's why when it comes to presenting material, I always do my best
they
to
asked
just
me to
keep
do
it
a
simple
private
and define
present.
my move that I do. And if you go back and
Recording
read
it right
some
now.
of my posts on my entries and exits and my setups, I define what I did.
Yeah, she's actually
SMS,
here.
but I
We went to
define
dinner
that's
with
a
her
switch in market
lunch the other
structure and
day.
kind of
She was
tell
saying
you
her
what it
name.
is.
She's a
Okay, so the, when I'm looking at a chart right here, let's go to the daily. Okay. So on the daily chart, the foundation of reading the chart is we want to identify major swing structures, okay? So here we've got higher high, higher low. So what I mean by higher high, higher low is that the market is moving in higher movements, higher, higher, higher. But in this case, this is the higher high. In this case, it is the higher low. Here we move to a higher high, higher low. We're still moving higher, 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 okay?
breaking market structure, switching market
And
structure.
then on the downside, we have lower, lower, lower. So we've got lower high, lower low, lower high, lower low. That's what I'm looking at when I'm reading the markets, okay? And again, going back to the definition of control, we have start, change, stop. Now, when I say the word stop, I don't necessarily mean that the market's going to stop, because it doesn't. It's very dynamic. But it is the definition of control, so I want to be true to the definition of control.
Oh, no.
But you got to understand that it changes, stops, but it continues to move. So that stop is it's instantaneous.
That's what it is,
based
bro.
on the markets.
Test.
It's kind of like, and
Yeah.
Justin, you'll know this from
I know, bro.
dancing,
Me
because
too. I want to
Justin
get on test
also
because of that.
dances, that when learning swing dancing, you are quick steps, quick, slow, slow, quick, slow, slow, quick, slow, slow. We don't necessarily stop, change, stop, and completely stop. We move on to the next cycle of action. So it's cycle of action, cycle of action, cycle of action. So that's the markets. It's giving us dynamic movements of cycles of actions. So when I say the word control, which is start, change, for now we can drop the word stop, although the axiom, the universal truth, is stop. I'm going to just go change, because we're looking for a change in direction when identifying movement of chart, so that we can identify when the trend is changing to feel secure that we're making the right decision, that we're going in a new direction. Okay, so we've got higher high, higher low, higher high, higher low, higher high, higher low, higher high, lower low, lower high, lower low. Do you guys see the flow of the market? You see this? You guys see it? Yes.
Yes.
You got? I got you guys all
Yes.
here with me. Okay. Now this is how to read market structure. Now, when I'm looking at market structure on any chart, in this case the daily, I want to know where the major swing structures are, where the major structures. What I mean by structure is this higher high is a major swing structure. This higher low is major swing structure. This material inside, we don't call this a higher high, higher low. We can, but in reality, these are minor swing structures, okay? In the middle here, minor swing structures. In the middle here are minor swing structures. So these are minor swing structure to the higher major swing structure, major swing structure. Does that make sense, guys?
Absolutely.
Okay.
Absolutely.
All right. So now the question is, when does the change occur? I've got higher high, higher low, higher high, higher low, higher high, lower low, lower high. That's the change. The change was that. We went from a higher high, price, let me see if I can grab the right tool here. No, let me see. Hold on a moment. Oh, where is it? Oh, path. Okay. So we went higher high, lower low to lower high. Do you see why that's a change in structure? You got that?
Yes.
This here? Okay. And that change in structure is called the switch in market structure. That's what that's called. Okay. That's what that's called. This is a switch in market structure. So a switch in market structure is the possibility of change in direction. Okay. The break in market structure is this. Why is that a break in market structure? Because
Lower
this
low.
higher, yeah, that's correct. Higher low created a lower low, breaking this structure. This was the structure we broke because the institutional order flow was higher low, higher high. It was all moving up. Institutional flow was moving up, and now institutional flow changed direction.
Hey, Julius, do you mind if I ask a real quick question, just so I, don't have an accumulation of misunderstandings?
Yep, sure. Yeah, absolutely. Important. Go ahead. Go for it.
So, right underneath the SMS, you have that lower high.
Yes.
The one.
Oh, this here.
Yeah.
Okay.
That one candle that kind of throws me off.
Yes.
Sorry.
Okay. Now I'm going to show you an important detail of this chart. What I wanted to do first is show you the concept of change in structure. You have a change, which was the SMS gave us the change, okay? A possibility of change. The BMS gave us the confirmation of change. What I wanted to do, now that you understand the concept of change, and you could look at this on every chart on any time frame, the daily, the 4-hour, the 2-hour, on Ethereum, you will be able to see all this exact same movement when the change occurs. Possibility of change, confirmation of change. I am going, what I want to do right now is ask you guys the question. This is an SMS. However, the formula of a confirmation of change of direction is SMS first, BMS second. So wait a minute. We have BMS first, and then the SMS was second. So now the question is, okay, if BMS is second, and that the formula is SMS to BMS, this SMS is in the wrong place. Can someone tell me where the SMS should be?
The lower high.
Correct. It is
Gosh,
the lower high.
that's my aha moment. Sorry, thank you.
It's right there. That's reading this chart properly. That is the SMS. That is exactly where it is. It's this green candle where price in one day pulled up, right? And then pulled back down. Because the formula is SMS first, BMS second. Now, do you ever have a BMS and then the SMS is really second? The answer is yes. And that's called a straightaway. It's very rare that that happens. So as soon as I seen this BMS, my question was, okay, is this a real BMS? Because I need to find the SMS, and in reality, that's where the SMS is. Do you guys get that? Can you see it?
Yes.
Okay, so that's where it is, right there. Okay, so now someone in an earlier the earlier Zoom had said, "Hey, Julius, you know what? Could we have called this an SMS?" Yes, we can. Now, pretend for a moment that all of this to the right side is not here. And I know there's a way to do it. Perhaps someone in the future can kind of walk us through how to do that in TradingView. But pretend for a moment this is what we see. Because we have here a, let me show you. We have a lower high, pretending that none of this stuff on the right exists. Okay, producing a lower high is a SMS. What? Hold on. And again, that's why it is called the possibility of trend change. In order to confirm a trend change, we would need a BMS. Correct. We would need that. All right.
I have a question, Julius, just to solidify some of what you've shared.
Yes.
With the lower high, and that's the example we were looking at before. With that being there, would we consider a lower low? Well, not. No, that's not. Okay, so we just need the higher high to lower high, but we don't need a lower low yet before that.
You mean in order to define a BMS?
For that SMS one, so it doesn't have to go from higher high to lower low to lower high yet, as long as it goes from a higher high to a lower high.
Okay. Can you point it out to me? If you scroll if you push your mouse to the top, there's going to say a drop-down menu will come up, and I think it says options, and then scroll down, and there's going to be a word that says annotate. Annotate is going to grab you a pencil so you can mark up my chart.
So between here, this part and this part, we don't need a lower low here in between the higher high and the lower high.
Okay, the lower low tells us the break in market structure.
That comes after, and that's part of the BMS.
Correct.
Okay.
This will give a better example, because remember, I'll tell you what, watch this. This is the way to do it. Okay, can you see the screen now?
Yes.
Okay, so if you notice, you've got higher high, right? And then hold on a moment. You have lower high. This is still higher low. In order for this SMS, possibility of change, to turn into a confirmed trend change, we would have had to drop down to this HL, to this line right here. So price would have to push it down into this direction here. It would have to push down there. Hold on, let me grab the right tool. Where's the arrow tool? Oh, here it is. Okay, price would have to go here, right? Up in this point area here, down, down, down. BMS, this is the BMS line, in order for us to call confirmation trend change on a daily chart. Does that make sense?
Yes.
Okay, so now watch what happens now. We're gonna move forward. Let me remove that. Ready? We're gonna move forward.
How do I remove the annotations from my end, just so that I don't mess up your page?
Go to the top, and you're gonna see an X, like to close out that window, and you just press X to close it out. Okay.
Thank you.
Yeah, you're welcome. So watch this. We're gonna watch price, and if price breaks down here on this support line, and how did we even define this as support line? Because this is major structure here, major structure here. Does that make sense? Okay.
Yes.
So, boom, and then boom. Price would have to break this. That's why I drew this white line here in order for this to be a trend change. We're going to observe whether this SMS becomes a BMS. And that's the reason why you have to follow up. The formula for change on your chart will be SMS, number 1, BMS, number 2. So we watch it. No, no, boom. Failed BMS. So if that's a failed BMS, the reality is this is not a major swing structure. It is this red candle is not a lower high as a major swing structure. It's just minor swing structure, minor movements within the major structure. Does that make sense? So I removed that SMS because the market's dynamic. It failed to BMS, right? So now we're watching price. Boom, boom, boom. Here we go. Sideways still, sideways. And then boom. There's your first break of market structure, new higher high. We broke this, creating a new higher high, right? And we continue. And boom. If you notice that where this here, because we have a green candle, this is where we would have dropped our SMS. We would have dropped it. We define it. Possibility of change. Where do I drop my support line? Hold on. Grab that. Okay. Right there. That's my new support line. If we break this line, we have BMS. Make sense? Because we have SMS. Now that we have SMS, which was this green candle, green hammer, that produced an SMS. Now I want to know, is this a change? And will it give us confirmation? So let's watch. Boom. Close. There it is.
Yes.
That created this BMS. Now that we have BMS, right? We want to know where the pullback is because there's always pullback into an order block, right? And that's what we're doing right now. We're pulling back. Created a BMS. He's going to go up, mitigate to improve his failed pricing because he came in on a buy here. Institution, a whale, they're in it on a buy. They expect this just like the rest of us to go to 200,000, but it failed. Broke, gave us a switch in market structure, gave us a break in market structure. Now that we have a break in market structure, they dropped 20 million. Reverse gears, pulled back, retracement. Now the question is, how far back will it pull back? It will pull back to an order block or a price imbalance. So watch. Boom, boom, boom. And it's because this is a large area here, there's probably a price imbalance inside here or an order block inside of this on a smaller time frame that price is now grabbing at. Once we did a BMS, this was confirmation of change. To find our exit, we could exit here, but if you notice, this is at 47. He pulled back 10,000 points. 10,000 ticks up, right? And our exit should have been in this range right around here. You know, but I'm guilty, just like you guys, of the idea that this was going to go to 200. So when this happened, I totally ignored it. I ignored my technicals. Now, do you guys understand how to read this now? Higher high, higher low, higher high, higher low, higher high. We're looking for a switch in market structure, right? This was a failed SMS up here because we never hit BMS down here. Remove all that. Hit a higher high, switch in market structure to a lower high. Break in market structure followed. This break in market structure gave us confirmation on a daily chart that we have a new change in trend. So now that we've broken market structure, we have to have faith that the market is going to go back up on a pullback to an order block or price imbalance. And that's where we would seek for our exit, right around here. Make sense? Okay.
Yes.
Yes.
So moving forward, lower
One
low.
question.
Yep, sure, go ahead.
So when you have the break and market structure,
Mhm.
and we go lower, the having faith that it's going to go higher
Mhm.
is because the people that bought at the top with the institutional money, they're going to buy back at this lower low. A lot of
That's
money,
right.
it's not like a dollar cost average.
Yep,
Things
that
are going
is
to go
correct.
back up so that they can exit kind of like break even or profit.
They're going to mitigate their failed positions. That is correct. That's exactly what they do. Not only do they mitigate their failed positions, but they were probably not as emotionally, euphorically high as the rest of us. So this is the value of knowing price movement, order flow, institutional order flow, because if you guys knew this, when I was at my friend's house and I seen this BMS, woke up 4 a.m., Alex seen it too. And he was buying because I was buying. I was calling my brothers and my wife. I totally ignored this was a real BMS. This is the canary in the cave, the concept being that the coal miners brought a canary into the cave because the canary, if that canary started dying, that basically meant that they were losing oxygen and they got to run out of the cave. This was the canary in the cave that told us that we've got a change in trend. It was happening. Institutional money was mitigating 20, 30, 50 million to go up here to exit, lost position. But you know what they did? Collectively, they bought, they basically shorted from here. Thus, this large push to the downside and a continued push to the downside as well. So ultimately, knowing how all this works, very, very simple. It's very simple. Control, change, knowing this, not just me, but it would be a confirmation as we move into the next bull cycle that I wouldn't be the only eyes to stare at this and be high on my own euphoria. So,
Absolutely.
does that make sense? Because I'm pissed off that I didn't get out at 58,000 too.
I was just thinking that if more of us knew this, several of us would have caught this.
Yeah. The indicators are delayed. The indicators were delayed.
Yeah, they always. I'm sorry, Julius. I just want to let you know, all of you, I got like 5 minutes left. I got this message from Zoom for this recording, but when it breaks, I just provide a new link.
Let's do it. In fact, we're going to throw up ETH next, you guys, and we can throw up any chart you want, and we'll look for it.
I just a quick question right now. So you exit the market like totally, like you get all your BTC out right now?
No, I'm actually okay. I anticipate price to break 29 and push down to this order block. All right, and quite possibly even push down to this order block. This is an 18,000 price right here, 18. So this order block right here is at what, 23,000, 24,000. However, I started to invest in March of 2018 on my HODL positions with Tika Tawari. He was giving us push signals. Even though Tika is almost 3 months late compared to you guys, my positions that I have with Tika, they're still holding well. I'm still in the positive with my overall portfolio. I got altcoins which are have gone negative, but I exited out quite a few altcoins just recently because of that. And these are the altcoins that are small cap companies. After talking with Jake and Sal about some of these things, I basically exited out some of these projects once it hit a high. Now the question is, am I going to hold? The answer to that question is I will, because even if I personally drop to about the teens, I'm going to be okay, because I'll probably be at break even or slightly under, slightly negative. And see, there's a when the market dropped in 2017, and it was a very long recovery. The recovery now is going to be different. It is going to be fueled with a lot of institutional interest and whale interest. So I personally think that the market is it's going to have a recovery period, because the market maker needs to build confidence with the public so that they can get in and he can play his game of accumulation, manipulation, distribution. So
yeah, that's a good. Sorry, don't want to interrupt you, but you just said it. You just used the word market maker, and this is like the concept I'm following at the moment for scalp trading. And so I just like want to touch on this. As I said, the recording or the Zoom meeting will break in a few minutes. But as I said, I just post a new one because this is very interesting, and you're doing it right now on the daily time frame.
Correct. When I'm
You started.
Yeah, when I approach the charts every day, I look at the daily chart because I want to know where the money's flowing. I want to know where the liquidity is flowing. So you know, so right here. So just to kind of finalize what I was saying, if it drops into the teens, my anticipation is the recovery period is not going to take the same length of time as it did between 2017 until just recently. I don't believe it's going to, because see, here's the thing. Market maker whales and institutions, they want to grab cheap pricing, and the teens would be ideal. So as a deep order block, but it made this bull run right here. Order blocks make bull runs. Order blocks make bull runs. This order block made this bull run. This order block here made this bull run. This order block right here made this bull run. So order blocks make bull runs. I'm determining that this is a good order block because this is a pretty good run, right?
Sorry, can you explain this word for me, because I'm foreign?
Yeah,
what's
the word order blocks?
Yeah.
Okay, imagine for a moment you're a hedge fund manager and you got $100 million, right?
Yeah.
Price is rising. You've got a higher high. That hedge fund manager is going to drop $20 million to push price down for sells. Once price pushed down, he's going now drop 40 million to reverse. He's now up. He's now winning in this situation. Does that make sense? So not only is he winning on his 20 million that dropped down to say 15 million, but he put an order for 40 million on a buy. Once it broke market structure here, this long candle, this losing position is now a winning position. His position here at 40 million is winning big time. Make sense? That's an order block. It's a block of orders that
block. Now I got it.
Yes, a block of orders that that the whales institutions will exercise in order to push pricing in a direction to get better pricing or to mitigate a losing position.
Yeah, okay. I got the concept. I just understand. I didn't get this order in